Hey everyone, Jeff Dorman, Chief Investment Officer and co-founder of Arca, back again for another monthly crypto market call. I'm joined as always by my partner Joey Reinberg. How are you, sir?
I'm good. How are you doing?
Good. All right. Well, before we get started, quick disclaimer. This in no way is going to be investment advice, and you can read the rest there. But of course, we are going to be talking about what's happening in the crypto markets. And for those who are joining for the first time, little preview of what we're doing here. I used to work at Lehman Brothers back before it imploded, when it was an actually very innovative and interesting firm in the early 2000s. This was when the internet was still kind of up and coming. People were barely using Bloomberg. The idea of getting information about global markets was actually more challenging than you'd think back then. And I was part of a group led by Rick Reeder, who was the head of fixed income and is now the CIO of BlackRock. Did a weekly call just talking about all the different data sources we were using to gather market intelligence. And it really was helpful to a lot of investors in the space trying to learn about not just fixed income, but equities and macro in general, not just about what was happening in the markets, but where we're getting the information from, where the data is. And you fast forward to where we are today in crypto. Similar thing is happening, right? 7 years ago when we started Arca, people just gave us the benefit of the doubt because we knew information that others didn't. But now we've got this, evolutionary asset class. We've got so much data and information coming across. We want to kind of give everyone not just our thoughts on what's happening in the market, but source some of that data, where we're getting it from, where people can start to do the research on their own. So we hope these monthly calls will help to educate investors, find the tools necessary to invest in this space, and get a little more sophisticated. So with that, Joey, let's kick it off. Moving on here to the first slide. It's been an impressive rally. There's been a $1.4 trillion added to the liquid crypto market cap since the election, which feels like it was a year and a half ago. It was only, what, 4 weeks ago, 5 weeks ago. $1.3 trillion added to the crypto market cap. Add another 100 to 200 billion if you include crypto equities. You could even add another, probably 3 to 500 billion if you include some private assets that aren't even public and have no observable price. But what was probably interesting is that you wouldn't necessarily have picked the best ways to play the post-election rally, meaning there's some obvious answers like DeFi rallying because of better regulation in the future. But seeing things like meme coins and some of the, quote unquote dino coins, right? We're talking protocols that have been around for 8, 9 years that have produced literally nothing of real economic value, and yet have now in the 10 to 50 billion dollar market caps. We're looking at things like, and I'm sure some people who are going to watch this are going to be upset and say that we haven't maybe done enough research on all these. But you're looking at your Ripples, your Stellars, your Dogecoins, your Cardanos, your Bitcoin Cashes and Hedera hash graphs and Litecoins. I mean, these are largely, for lack of a better word, shells, right? These are projects that have not quite actually figured out what they're trying to accomplish, other than have a token that trades. Anything to add to that? I mean, like, why are we seeing this, right? Is this just people logging into Coinbase for the first time in 4 years and trading what they already know, or is this just indicative of what this space is, which is a lot of option value on what could be if you have enough community members and enough brand recognition?
Yeah, I think it's mostly the brand recognition part, as well as like people logging into their retail accounts for the first time. Most of these projects were the first attempt at an alternative layer one. And today you're seeing so many better products out on the market that there's really no reason for developers or users to use any of these chains, and they're obsolete. But in crypto, no companies really go bankrupt. The token just trades forever. So I really think there's not much to it besides people in retail coming back for the first time in a long time.
Yeah, and I would, again, not to anger anybody here, I would say that when you think about the value of anything in crypto, right? It's part financial value, meaning cash flows and revenues. Obviously, none of these Dino coins have any of those. It's part utility value, meaning is it useful? Can you use it? Are you sending it for payments? Are you using it for gas or collateral or whatever? Some of these have minimal utility value, right? They haven't really figured out a product market fit, but the tokens can still be, spent or used. And then there's the social value component. And obviously, these have massive, massive social value. But again, if you think about where crypto is in the adoption phase right now, really nothing has had that much of an impact on the broader world outside of maybe Bitcoin and stablecoins. So, even the protocols that we would consider more mature and having more product fit, still have a long way to go in terms of growing into what people expect them to. So, again, it's another way of saying that a lot of these are just option value. And even if they're very expensive at options at 10 or $50 billion market caps, who knows? One day maybe these will become the most important chains in the world. So, not something that maybe a fundamental research analyst like ourselves would be able to get behind because you just, there's nothing to really dig your heels into. But certainly, not something that I could say definitively won't matter in 10 or 20 years because you never know. You never know what chain Microsoft is going to adopt or Facebook or, Amazon or Nvidia. So, one day when every single company, municipality, university, and entity in the world is using blockchain in some capacity, they're going to have to ultimately build on some of these chains. So we'll see where that goes. But moving on to the stuff we do look at, more of the fundamental research. We did mention that DeFi has been one of the biggest beneficiaries of a perceived regulatory change, given that most of these protocols and projects are actually succeeding. They have real users, they have a use case, they have real revenues and cash flows. I'd imagine a lot of this is due to the excitement over the fact that, again, if you go back to financial value, utility value, social value, a lot of the financial value of these DeFi projects has essentially been stripped from the token holder because everyone's been so afraid of regulatory and legal repercussions for turning on fee switches or paying dividends to token holders. Is that the bulk of this, or is there more going on that's led to this kind of ferocious DeFi rally post the election?
Well, I would say it is a direct beneficiary of Trump winning and the like perceived uh ability to now have different tokenomic structures that allow for fees to be directed back to token holders. But it's also that these are some of the highest like revenue generating and used projects in crypto. If you're going to swap a token right now, a lot of people are going to Uniswap or Aerodrome or Radium. And if you're looking to borrow money on chain, a lot of people are going to Aave. So this is actually what people are doing on chain, as well as it has a direct benefit from Trump winning. But also Trump launched a new DeFi protocol with Aave. So part of that rally could be perhaps that he's actually building in crypto on Aave and is now buying tokens on the open market and it's visible on chain. And most of those are in the DeFi category. So I think it's a combination of it all, but really I think it's a Trump victory that led to this.
Yeah, and you can see a variety of different, obviously this is not all encompassing of everything in DeFi, but you can see a variety of different tokens that we put in this chart here. Athena being powered by the basis trade to power a stable coin. You have Uniswap, as you mentioned, one of Uniswap and Aerodrome being exchanges, places to trade your tokens. You've got Lido involved with staking. You've got Aave involved with lend borrow, right? So there's obviously a bunch of subsectors and subcomponents of DeFi with across multiple different chains that are all having varying levels of success. But of course, moving on here, this is still crypto, and when you have people getting really excited about what's happening in digital assets, it tends to lead to excessive leverage, and ultimately excessive leverage can lead to liquidations, right? We saw one of the biggest liquidations in the last 3 years this week alone, right? We came into Sunday, market was kind of hot. We saw funding rates really high. So for those who are wondering what we mean by that, when you trade perpetual futures, meaning there's no maturity date on the future, you have to find a way to entice either buyers or sellers. So when the funding rate is super positive, it means that there's more buyers than sellers, and they're trying to entice you to sell by earning that funding rate. Vice versa, when the funding rate is very negative, it means there's more people shorting than there are people buying. So you actually earn a yield if you start to buy. And they use that as a way to balance out sort of the same way that a bookie tries to keep bets even on both sides by adjusting the spread or adjusting the line. These funding rates were massively positive, meaning excessive leverage. Everybody was using futures to buy, and it led to a nasty wick that we saw on Monday and Tuesday. Some prices down as much as 25-30%, wiped out $2 billion of futures value. I don't know if there's much of a takeaway here other than this is what you're going to see, right? Just because prices are going higher and it looks like they're going to continue to go higher doesn't mean you can just go 100-to-1 leverage or 50-to-1 leverage and not carry that risk, right? So there's certainly a learning lesson for many that have, maybe gone above and beyond what a normal allocation to crypto would be. And again, in terms of sources here, we can get this on CoinGlass, you can get this on Velo. There's a lot of great data out there where you can see everything from options skew to futures liquidations, et cetera.
Yeah.
Moving ahead here, I think one of the things that we monitor, there's a lot of different sentiment indicators. Of course, you can look at things like YouTube videos, you can look at things like Google Trends, you can look at, where Coinbase and where Robinhood are in terms of, App Store usage. There's a lot of different ways that we can monitor now sentiment shifts. But one of the big ones here, and Joey did a nice job pulling these charts from Artemis, just showing asset flows into digital assets, right? It basically meaning dollars into the ecosystem. One of the things we've been lagging the last 2 years has been that money coming in, meaning it's been a lot of just player versus player or rotation within the money that was already in crypto, but we weren't seeing new money coming in. You can see on the chart on the left here, this is just ETF flows. You can see just a massive amount of inflows into Bitcoin ETFs, into the Ethereum ETFs. Maybe a little harder to track, but you'll start seeing, you're hearing about venture funds and other private liquid funds starting to get money in from institutional investors as well. But I mean, that's one component of it. I think there's been 9 straight days of inflows for the Bitcoin spot ETFs of $200 million or more, totaling 4.2 billion of inflows in the same 9-day span. Ethereum spot ETFs have seen daily inflows of greater than 80 million per day with a total of 1.7 billion. So these are really big numbers coming in. And on the right here, talking about, looking at stable coins, right? So another way to get money into the ecosystem is to mint stable coins, right? You bring dollars in, you're given a stable coin in return. You can see USDC and Tether, billions of dollars being minted here over the last couple of weeks, which is just, again, another way of showing that new money is coming into the ecosystem. So moving ahead here, getting into the real more interesting stuff here and start to turn it over to Joey into more of what we're seeing here. But, one thing that we always talk about is it's one thing for speculative dollars into tokens as investors. It's another thing to actually see usage of these applications and people starting to experiment again. What are you showing here in terms of is this the right way to measure, usage and adoption?
Yeah, I think like daily active users is an interesting one, but there's also a lot of crypto activity that generates financial value that's driven by bots and Sybils and all this automated activity. So it's more of a indication of real people that are using crypto applications in their daily life as a measure of kind of like outward reach of the crypto space in general. But there is a lot of economic activity happening outside of real people. So I think it's just a good metric to kind of see that, kind of see the growth, not as much that it's like is telling of a metric.
Yeah, and I think this is, if I think we've put it in probably in past reports as well, talking about like where blockchain adoption is relative to internet adoption, and you can see like if you start the blockchain clock somewhere around 2015 and you start the internet clock somewhere around 1996, you'd be able to see like daily users over annual periods, and blockchain is keeping pace, actually exceeding in a lot of cases the growth of the internet. But it is a hard measure to track, right? Because I own 10 different wallets. Joe, you probably have 100 wallets. I mean, Arca has hundreds of wallets, right? So it's hard to look at, wallets as the way to track the growth. But it certainly matters finding different ways. And shout out to Token Terminal here, but other data providers who are finding ways to track the actual usage and the user base growing in crypto. So again, user base is great. Moving on to the next slide here. Where are these users going? Like, what are they using? Where are they flocking to? What are you showing here? Again, it's courtesy of Artemis.
Yeah, so I really like putting this chart in monthly because it's the best way over a month-long period to see where money is flowing in the ecosystem. And this is mostly from bridges of people actually moving assets across different bridges on chain instead of going through like an exchange, for example. So most of this money is leaving the Ethereum ecosystem and actually going to Base, which is also part of the Ethereum ecosystem, but is a layer 2 scaling solution, or to Solana or Arbitrum or Sui. And I think it just is a great metric of showing where people are actually using money on chain versus just speculatively buying tokens on an exchange. And that's really being driven this month by Base. And a lot of that was from the AI agent frenzy that we'll be talking about in a little bit.
Yeah, and that kind of dovetails with the slide from a couple slides ago, talking about the inflows into crypto, right? So there's only a few ways to get money into crypto, right? One is through a brokerage account, like buying the Bitcoin or ETH ETF, or even if you're directly trading on Robinhood or PayPal, right? That means you're basically hooking your bank account up and you're buying a token, or an ETF of a token directly through there. Another is you actually send money directly into a Coinbase or into a Circle, or some other on ramp, or maybe you have an account directly with Tether and you're sending money directly into Tether. But there's only a handful of ways to actually get money into the ecosystem. But then once the money's in the ecosystem, what is actually happening with it? And I think this is a great chart and one that people should be monitoring in terms of how they're actually making their investments to see once that money is in the ecosystem, where's it going? What are people using? And again, this is where we talked about the Dino coins earlier, some of the ecosystems that just have nothing happening versus some of these like Base and Solana and Arbitrum and Sui, where you can see actual dollars being put to work. Moving ahead here, I'll eat a little crow. I think I've been on record multiple times saying that I think Polymarket will not die, but certainly won't be nearly as important or impactful post the election. Maybe this is just the old man in me, having been through multiple presidential elections and multiple cycles of prediction markets. Sorry, not prediction markets, but well, yeah, prediction markets of even pre-blockchain, showing that these things are largely kind of a flash in the pan once an election is over. Doesn't seem to be the case. Polymarket, certainly off the highs of the November election, but looks like pretty sustainable growth. So what is happening? How is that happening? And is this a crypto specific uh, rationale? Meaning, is it because of blockchain or crypto that is empowering this and making it so attractive, or is it just right time, right place, and prediction markets are part of an overall gambling culture that we're seeing now?
Yeah, I think it's a couple things. There's two kind of like sects in crypto. There's the speculative aspect of crypto where crypto is the greatest like speculative tool like ever created. But there's also the part of crypto where it powers the back end of applications and users never really know that they're interacting with a crypto app. And I think Polymarket's like one of the better examples of an application where users don't necessarily know that they're using a like exchange-based crypto app, except for the onboarding of if they have to onboard with crypto tokens. Um, but a lot of this is due to different markets and the gambling culture that you mentioned. And some of the like bigger markets yesterday when I looked were like people betting on the Fed's decision, on the Romanian presidential election, betting on the price of Bitcoin, or like different people in Trump's cabinet. So I don't think that necessarily because the election is over that these markets aren't necessarily, a lot of them are election related, but they're related to the inauguration, they're related to Trump's cabinet, they're related to different pieces of the election that are still coming up.
Yeah, and shout out to Dune Analytics. Again, if anybody's serious about crypto and crypto investing, you need to have a Dune Analytics account. You need to be looking at these different dashboards because, again, don't forget what blockchain is. Blockchain is a ledger. This information is public. It's just a matter of how do you read it, how do you organize it, and there's a tremendous amount of useful dashboards that people are building on Dune to get some of this data. All right, moving on. We talked about some of the ecosystems that are doing well. They're starting to get inflows base on Ethereum and Solana, being some of them. Maybe not the best chart here, so apologies for having it be cut off here. But you can see that again when we talk about value of digital assets, meaning what part of it is financial, what part of it is utility, what part of it is social. There's a meaningful financial component to a lot of these applications, specifically in DeFi, but also sometimes in gaming and other areas. You can even see in DePIN, but specifically to most of these DeFi apps. These are real dollars. And it looks like the dollars are flowing more towards apps on Solana than necessarily Ethereum.
Yeah, I like this chart because it was literally from November 1st to November 30th. So you could see over that 30-day snapshot of the last month where different protocols revenues sit. And this is kind of just another metric for where users are actually doing stuff on chain. And Radium was leading the pack, Jupiter was second behind that, and most of that was due to speculative meme coin trading or perpetual future trading on Solana itself. And then Jito is MEV revenue from basically priority fees and people paying extra to get priority in blocks on Solana. And then after that, you see Maker, borrow lending on Ethereum, ENA, as we mentioned earlier, with the basis trade, Aave borrow and lending, and Lido liquid staking. But all of these protocols are very profitable, and right now they can't actually push those those dollars back to token holders. So the future of crypto is where actual token holders are going to get some of these revenues that these protocols are actually generating.
Yeah, and it's interesting too because Solana and the Solana ecosystem obviously has been one of the best performing ecosystems of the last year and a half. But actually, post election, it's been one of the worst. Solana is only up 40% since the election. Just for context, there, Ripple's up 370% since the election. Bitcoin's up 47, ETH is up 63, and Cardano up 240, and obviously ETH DeFi up anywhere from 100 to 300%. So even though the apps themselves are generating a lot of revenue, mostly driven by meme coin activity, certainly suffering from a performance standpoint relative to a lot of other ecosystems, especially as we talked about Base. Okay, moving on. Looking at where, again, in some ways, you're just showing another way of where money is flowing here, right?
Yeah, so this is where actual venture dollars are flowing, and um, whether that's applications or infrastructure within those ecosystems. And in Solana, 74% of the private money investing into the Solana ecosystem is actually in applications. And in Ethereum, only 40% is into applications. And this is really because of like how these blockchains were created. Ethereum needs all this external infrastructure to properly scale and reach the masses and the speeds and the transactions per second that Solana is already at. So like my main takeaway from this would be that Solana is already scaled and is now able to host all of these applications, and that's where the money is actually flowing. Well, Ethereum still needs this venture money to flow into helping it scale to even reach the possibilities or what's possible on some of these alternative layer ones.
And I know we don't have the data for this, but like, what would you imagine something like, I don't know, like Cardano would look like if at all, or like a Sui or some other ecosystems or Base? I mean, is it
Yeah.
similar? Would you expect to be similar or?
So base, I would say like probably 100% is into applications because the Coinbase team is building out the infrastructure and doesn't necessarily need venture money. Sui is pretty similar. I would say probably at least 80+% is into applications. And then in most of those Dino coins, the reason I think it's really hard to get invested in them, and venture investors across the space would say the same thing, is there's nothing really being built there. And there's almost zero venture money flowing to those areas. And if anyone can prove us otherwise and show where venture money is actually going in those areas, I would be happy if you would be able to send it to us, because I'm not seeing anything of substance being built there.
Yeah, absolutely. Okay, so a lot of good intro there. I think 10, obviously a lot more going on in the market now, so we had a lot of intro slides. Let's get into something that's really interesting right now. I think one of the reasons we do this call is to kind of introduce different sectors and themes. Clearly, the AI theme, one of the hottest, not just in crypto, but outside of crypto. I think many of our listeners and readers know we've been talking about BitTensor for a year and a half. We've written multiple things on it. We've been investors, since middle of last year. We're still a heavy investor in BitTensor and the Tau ecosystem. And that for a while, it was really sort of the benchmark of AI and crypto intersection, BitTensor being really an incentive mechanism to encourage the building of all kinds of different AI type applications. But in the last couple of months, we've seen a shift away from sort of this big, call it B2B AI infrastructure that BitTensor is building, and into specific AI agents and specific platforms. Let's start real basic, Joey. What exactly is an AI agent?
Yeah, so an AI agent takes a user's input in English and processes it by a large language model, similar to like ChatGPT, and comes to a decision on what to do. Like in the past, you would like with a traditional bot, there would be no LLM, and you would just take in user input, and it would be able to buy something on the internet, or basically like tell you what the weather is. But an AI agent can actually take that information and process it and analyze it and come to like a human-like decision at the as an outcome. So
And
in the context of crypto, you can mint stuff on chain, you can mint NFTs, you can launch meme coins with an agent, all while prompting it in English instead of having to actually know how to code. So I think this is one of the biggest like um potential shifts of allowing people who aren't necessarily crypto native or know how to code to be able to actually execute things on chain. And I think that's what's super exciting about it.
Yeah, and I think, in terms of the intersection of AI and crypto, one obvious one is that, in a semi-sentient AI personality is not going to be able to walk into a bank and get a bank account. They're not going to be able to get a brokerage account, right? So these are largely going to be personalities that still need a puppet master behind them in terms of money if you had to use the traditional rails. But as you said, if you can program these AI agents to have the ability to think critically and also tie them with money using crypto rails, of course, the opportunity set is infinite in terms of what they can and can't do with sending money, investing, etc.
Yeah, and I think the important thing you said there is that the crypto rails are necessary. Like crypto is the only form of payment right now that these AI agents are actually able to use. And that's super impactful because they can't actually go and send a wire at a bank, but they can send USDC on Ethereum or Solana. And that's like a much quicker and simpler way of like for these AI agents to one communicate with each other, but also communicate with humans financially.
Yeah, so obviously, in order to have a new sector or theme, you got to break down what the components are, right? So obviously, you need to. We'll get into the specific AI agents in a minute, but you'll need some platforms where these things can be launched. You'll certainly need some code base and some framework. So let's get into that. What is let's on the next slide here. Like what is virtuals? Let's start at the top.
Yeah. So Virtuals is now the like hottest name in the AI agent sector, and it's a launch pad on Base. Basically, what that is like a no-code tool for people to go in and launch an AI agent with a corresponding token for a fairly almost free amount of money. Basically, what's going on is you can go in, you can give it a name, a personality, different traits you want the AI agent to have, and this AI agent can connect to external applications like TikTok or different live streaming platforms or different gaming platforms like Roblox, and actually act as like a human-like figure in these different social environments. And in doing so, they get revenue from those social platforms, like as if an influencer would. And people can then speculate on the success of these AI agents with their corresponding token. So you've seen a lot of that going on with AIXBT being the biggest token launched on Virtuals so far, which we'll go into in the next couple slides. But Virtuals has made 22 million in revenue since their launch in October, with over 10,000 agents actually making it off of their launch pad onto their main website. And it's been one of the biggest successes in crypto in the last month and really came out of nowhere.
And it should be noted, Virtual has a token, roughly a $2 billion market cap, up 400% since the election, up something like 6,000%, since the kind of September lows. So clearly, something that the investors are latching onto and not just the users. Can you talk more about real quick before we move on? Anything else specifically built on Virtuals? You mentioned Luna, who I believe is like an AI pop star. Is there a reason that Virtuals was built on Base? Is there something about Base that makes Virtuals work better than where it would anywhere else? Or what's sort of the confluence of how we got to where we are with Virtuals?
Yeah, so Luna was the first agent created by the Virtuals team. I don't necessarily think there's a reason that Base is better suited for AI agents. AI agents can really live on any chain because they're not actually on chain. They're hosted elsewhere, but they have the ability to actually execute things on chain. So I think that's a little bit of a distinction is the AI agents are actually not a crypto specific thing and could be anywhere, but they have the ability to only access certain chains. So on Base, the tokens just through the launch pad are launched on Base, and that's really the like main connection.
Okay, let's move on. Next one in terms of the AI agents, we've got AIXBT. What do we got here? What's this?
Yeah, so AIXBT is basically the number one research companion AI agent that acts as a analyst similar to we do at Arca. And it pretty much you can tweet at it and ask questions and it will reply to you, or it just tweets on its own thoughts. So for example, here it just tweeted out its thoughts on Grass, which is a new DePIN project, basically scraping web data for AI purposes. And it was talking about its revenues, its different buyback and burn mechanism, as well as its circulating supply, and how it's launching a mobile app soon. A lot of this information would be really hard to like figure out necessarily on your own. Not necessarily hard, but it would take time. And AXBT can synthesize this data and make it much more accessible in just directly through Twitter.
Yeah, and just, what do you think some of the end games are for something like AIXBT? I mean, obviously, it could
Yeah.
eventually turn on a subscription model in terms of charging for some of the research it's producing. What are some of the creative use cases? Again, AIXBT has a token as well. It's about a $200 million market cap. I don't have the numbers in front of me in terms of how much it's up, but another one that has benefited from the rise of AI and AI agents in the last several months here.
Well, yeah, any of these that are greater than a zero market cap have actually done very well because they all launched at essentially $0. And were all fair launches, which is part of the attraction for retail investors and investors like us, is you can get these super low valuations on a lot of these things. But I think the end game for AIXBT is that they launched their own terminal where they require you to stake 600,000 tokens to get access to a terminal where you can directly ask the AIXBT agent questions without having to publicly ask them on like a Twitter or something like that. And people are using that. But I think eventually there will be some sort of subscription model or some sort of other mechanism for them to generate revenue because this is providing real value to people in crypto. And it's one of the first projects I've seen in a while that is actually providing inherent value outside of speculative value.
Yeah, and in terms of, again, thinking about how we value tokens, how we look at them, he mentioned 600,000 AIXBT tokens are necessary in order to join the private Discord. Tokens trading about 20 cents, so you're talking about roughly 100 grand or so in terms of needed to get some of the information in these private channels. It's also worth noting at the very top there, you can see in the chart that it says automated on Twitter. So already, X Twitter has figured out that you need to differentiate an AI agent versus a human in terms of what they're putting out there. So pretty quick work there by the Twitter and X team to differentiate there. And also, again, regardless of whether you are a first day crypto investor or you've been doing this for 8 years, this is easy. I mean, this is literally just setting up a Twitter account, following the AIXBT agent, and seeing some of the information they're putting out there, and tweeting at it, interacting with it, seeing what's out there. So we're talking about, in the past, we've talked a lot about how crypto has been inaccessible for those who don't know how to be on chain and don't know how to do some of the things that, that our 30-person team at Arca does on a daily basis. This one, there's no excuse. I mean, this is easy. This is just a simple user interface to get started. Okay, moving on. Let's tie these two together. Virtuals. How has AIXBT contributed to the success of virtuals?
Yeah, so basically AIXBT has been making up over 60 to 70% of the trading volume over the last 7 days on the Virtuals platform. And part of the way Virtuals makes money is taking trading fees directly from people trading through their platform against the Virtuals token. So a lot like AIXBT was really the first successful agent that reached mainstream crypto sphere. And a lot of the success of virtuals and why the token has been doing so well can directly be tied to the agents under it. And AIXBT was the first like big agent in crypto and is still taking up the most amount of mind share in the AI agent space, which if you're interested in checking out, cookies.fun is a platform where you can see what people's mind share across all the different AI agents is.
Yeah, and shout out to Dune Analytics again here. Great dashboard. I don't know, I can't see exactly who created this 0x Ludic, but shout out to those who are creating these dashboards and giving us visual representations and real data to support these views here. Okay, let's move on. We've talked a lot about virtuals and Base and what's being built there. Obviously, that's not the only chain. Solana certainly in the AI game as well. Is VVIFU, how is it different than virtuals other than being on a different chain?
Yeah, there's very little difference besides like UI UX and how it actually looks to the user, as well as kind of like tokenomic structure are really the only differences. Both of these are just no code launch pads to be able to launch an AI agent with a corresponding token in a very simple manner. I think the one thing that makes VVIFU stand out is it uses you have the option to use the ELIZA framework, which is what we'll discuss in the next couple slides, but that's basically a tool to allow people to create really, really good AI agents in a very simple manner by only having to give like a description, different personality traits, different all different traits that you want this AI agent to have. And one thing about VVIFU that I didn't mention is it launches a token on Solana through pump.fun. And that's about really the only difference. And I think it's really interesting because I actually think the tokenomic structure of VVIFU makes a lot more sense. So basically yesterday they created a new tokenomic structure where it's free to launch an AI agent with a corresponding token, and then VVIFU as a entity takes 0.9% of the supply, and they charge you additional fees and burning of the token to unlock additional features, like if you wanted to be able to tweet on Twitter, if you wanted to be able to be on TikTok, if you wanted to have Discord access or Telegram access, all of those things cost additional fees. But in this case, the fees are by burning the VVIFU token, creating a supply shock to the actual token itself.
Yeah, and it should be noted, we mentioned virtuals is about a $1.9 billion market cap already on base. VVIFU is more like a $50 million market cap here on Solana. So pretty big difference there right now in terms of how the market is valuing these two platforms. Just give an example though, Joey. Like if you were going to create a Jeff Dorman or an Arca agent or something, like what kind of inputs would you put in, or what would you be able to do? Because you said this is basically low code, no code, right? Anybody can go on here and create something. Like what would be an example of something that you could create on here?
Yeah, so you could really create whatever you can imagine. Like it asks you a description of it, a personality, what you want their first message to be, their lore, their style, the different adjectives to like that they can use and describe them, their knowledge base. So you can basically give it all of our Arca to Satoshi blogs and have it speak exactly like you based on your writing. You can really get granular and provide as much data as you want to have it be as specific um to what you're trying to achieve. And that's part of the challenge is like I don't necessarily, it's hard to give an example because I don't know what the best thing to build is, or I would have probably tried to build it myself already.
Right. No, the point is, again, this is something that for those who are a little intimidated by crypto, this is one where you don't have to be, right? This is a low code, no code solution. You don't have to know anything about crypto. You don't have to know anything about coding. To Joey's point, I've been writing my Two Satoshis blog every single week for 7.5 years. There's a lot of information and data in there that you could train an agent to then go out there and have a personality and who knows what it ultimately would learn and run with from there. So a lot of different opportunities of things you could do here. Okay, so you talked about VVIFU on the next slide here. The data suggests that there's been a slowdown here in the burn. Why are we mentioned virtuals and AI XBT taking off and Luna taking off. Like, why are we seeing the opposite here in terms of what the data is showing on VVIFU?
Yeah, so I think it all comes down to you really need that like one hit wonder, not like one hit wonder, but that big success of an agent to launch to bring people into the platform and learn about it and start using it. On middle of November, you really saw like a big AI frenzy and people were talking about VVIFU. And this was before even like virtuals took off at all. And virtuals was probably like a $200 million market cap. And VVIFU came out of nowhere. But I like this chart because you're able to actually see from the burn what people are doing on the platform, because you can break down the burn because of the amount they're burning into whether that was for a token deployment, whether that was for access to Discord or Telegram, or whether that was for Twitter access or training the agent. And that's because all of this is actually happening on chain, which is one of the better things, because in previous buyback and burn mechanisms, you're not able to actually see if they're actually burning the token. And this is a super transparent tokenomic structure that allows investors like us to gain insight into what is actually happening with the token and how this supply is decreasing on a daily basis.
Great. Okay, moving on here. You mentioned the ELIZA framework as one of the code bases and open source code bases that anybody can build off of in the AI. What is the ELIZA framework? How does this different from what you're talking about with a virtuals or a VVIFU in launching an agent versus what the underlying actual framework looks like?
Yeah, so first of all, AI 16Z is a decentralized investment fund that the main developer created this ELIZA framework to help people launch agents. And what he did was he created a GitHub repository, which is basically a place for open source code to live, where anyone can then contribute to that code to make it better. And the ELIZA framework, from talking to developers, is the best framework for creating these AI agents currently. Virtuals has their own framework that is separate. VVIFU has their own, but allows you to use the ELIZA framework. And just in terms of like scope of who this is reaching, it was the number one trending GitHub repository, not just in crypto, but of any code base across the world in the month of November and or into December. And you've seen 943 forks, which means people creating copies of it to launch AI agents, 122 different contributors that are making this code better day by day. And this makes it really difficult to compete if you're a closed source framework because you have 122 different devs that are willingly for free contributing to this platform to make it better. And that's the power of the like open source code movement is that you're exponentially just generating better and better outcomes because of people coming together in ways that like you've never really seen in closed source environments before.
Now, does AI 16Z and the ELIZA framework compete then with virtuals and VVIFU? Like, meaning is it VVIFU and virtuals is more for non-developers who just want to have fun, whereas ELIZA framework is more for, deeper dive developers who want to build something more real, or how would you explain that in terms of?
Yeah, that would be that's a very good way of describing it because unless you're using VVIFU to launch through the ELIZA framework, you would have to know how to code in TypeScript, I believe it's written in. You would have to basically fork the code into an IDE and then code it yourself and launch it actually through like a terminal. And that's a more difficult endeavor to go on if you have no coding experience. Um, but yeah, I think it's just proven over and over that this is like the best framework, and that's really why the AI 16Z token is taken off entirely.
Yeah, and of course, again, this is a crypto investment show, so AI 16Z is the ticker. About almost a little under $1 billion market cap now. It's up 150% month to date. You could easily graph the price of AI 16Z token with a chart like Joey showed here, or a chart on the next slide here, just showing how the ELIZA framework is dominating. So how would you compare ELIZA then to the other open source AI traction right now?
Yeah, so this is in terms of stars on GitHub, which basically is just when someone favorites a repository, meaning they want to come back to it or are currently using it. And red is the ELIZA framework, and you could really see how much it like exponentially took off versus all of these other different open source AI frameworks that we look at. For example, like you could see virtuals is in yellow at the very bottom, like way less people are looking at it on GitHub. You can look at the different bit tensor models or the Noose Resource or Spectral Finance, and none of these models have reached the success at all that ELIZA has in this short period of time.
Yeah, and again, while we're not making investment advice here, it's worth noting that the prices of these crypto assets are not just randomly moving in a lot of these cases, right? There's always examples of that. There's going to be meme coins. There's going to be things that are moving in maybe ways you can't explain. But it's clear that you're seeing real growth and real traction in these actually underlying projects that, of course, correspond to the rising token prices. Moving ahead here, so you mentioned that AI 16Z is the token. That's the investment DAO. They've created the ELIZA framework, which is being used in open source code. How does AI 16Z then? What is it outside of the ELIZA framework, right? If you've got the open source code over here, then what does that have to do with the actual token itself?
Yeah, so the open source framework was created to create the two first agents that are going to be basically AI agents that are acting as investment managers. So they're going to be sourcing investments, making investment decisions, actually trading on chain, and none of that's actually live yet. So basically the only thing live is the ELIZA framework, and people are using that framework and as like a show of goodwill are donating some of the tokens from the first launched agents back to the AI 16Z investment DAO. So right now the NAV of the DAO is about $12 million. But as people start using these no code platforms like VVIFU or launch different agents on however they want to do it, a lot of the NAV of the fund is probably going to grow. And as well as these AI agents that the fund is actually launching are going to be able to trade these tokens and try and grow the NAV of the fund itself.
Yeah, it's pretty cool. I mean, essentially, AI 16Z doesn't have a business model yet, other than basically getting tipped by those who are using the ELIZA framework. So it's like, for all the bad stories and negative stories you hear from Senator Warren and others on Wall Street talking about, crypto. Here you have this open source framework that anybody can use. You have no requirement to pay the ELIZA AI 16Z framework for using it, but it's encouraged that you send a tip. And now they've already generated $12 million worth of tips essentially for building an open source protocol. So there's a lot of cool stuff going on in crypto beyond what you maybe hear or read about. in the mainstream media. So last one here on the AI stuff. What is Clanker? I don't,
Yeah. So Clanker is a pump.fun competitor for launching tokens on Base, but there's no
For those who don't know, Pump.fun is a Solana platform where you can create any meme coin. So it's like, if you're wondering why there's just seemingly endless amounts of meme coins out there now, and most of them go to zero, but a few of them catch on and start to really build kind of a following. But you can create these pretty much instantaneously on Pump.fun, again, with no coding knowledge, no anything. So
Yeah,
anyway,
so
that's meme coins.
yeah.
This is now AI agents.
No. So this is actually this is only for launching tokens actually, but it uses an AI agent to take people's basically description in English on Fark. So basically Farcaster is a decentralized social media platform. You can cast, it's called, which is similar to sending out a tweet on X or whatever they call it now. So on Farcaster, you would cast or tweet out like, I want to launch Jeff token with and the AI agent called Clanker will take that English information and on the back end launch a token for you on Base. And part of the reason Clanker is done well is they take a portion of all trading fees for all the tokens launched. So they're making almost like $200,000 a day by running an AI agent to launch tokens for people. And it's just one of the like small success stories in crypto in terms of revenue because it's such a small subset of people are using Farcaster and are launching tokens with this, but they're making an enormous amount of revenue still. Just because of the like basically the structure of how they created their AI agent and tokenomic structure.
Exactly. And again, another one that has a token, Clanker is the token, about a $60 million market cap. So another small cap here, but as Joey mentioned, generating meaningful revenue for a small cap token. So I think that's it, in terms of the AI stuff here. Obviously, we did about 10 slides here, but I think the bigger takeaway here is, we've only been doing these crypto monthly calls for about a year now, but obviously Arca has been around for almost 8 years now, putting tons of educational material out there and tons of writings and blogs. You can see that the thematic kind of evolution of this space, starting with Bitcoin, then a bunch of Bitcoin spin-offs, then a bunch of smart contract platforms, then you get into DeFi and stablecoins and NFTs and gaming, and then into Web3 and DePIN, and now AI. So one of the big takeaways for us is simply, as this industry continues to grow and evolve, being ahead of the curve on each of these themes that has developed has really been impactful in terms of investment returns. Seeing the stuff early, getting your hands dirty, playing around with it, understanding the value drivers. So, I unlike some of the other things that maybe have existed in crypto over the last 4 or 5 years, I think this is one in terms of a sector and a narrative that we'll be talking about for years to come. Maybe not the individual projects, right? Some are going to succeed, some won't, but certainly this intersection between AI and crypto and the AI agents has some meaningful traction here, and I think will soon be another sector that has similar kind of growth as we've seen from, again, DeFi, stablecoins, gaming, NFTs, etc. So that's it for this month. I appreciate everyone joining us. Joey, thanks as always. You know where you can find us on our website, ar.ca. You can tweet or at us at Arca, or I'm at jdorman81. You can certainly go on our website and see all of our blogs and all the other materials. Joey, where can people reach you?
At Twitter at jreinberg13 is probably the best place.
That's not because he's 13 years old. He is older than that, and has been a pleasant addition to the Arca family over the last couple of years here. So that's it, guys. Thanks again for joining, and we will see you next month.